Alright, today I want to show you something really interesting. When Microsoft was trading around $550, and that was around 6 months back, everyone was FOMOing in, everyone was buying. I patiently waited and sketched out my technical levels. Now, 6 months later, price has really come into that zone and I am really interested in buying. Every day, technical analysis really amazes me. It tells me one simple thing: if you can buy something for a discount, why pay higher prices for that? Today, in this video, I'm going to show you my exact technical levels and how I plan my trades ahead of time. Try to connect the zone from January of 2023 to tariff crash, which was around April 2025, and keep extending it further. So this is what a trend line is. Every time price tries to hit that support zone, it has held and it has always bounced. Now, if you extend this line and extend it right above to get the upper point, every time price has been hitting the upper zone, it has been restricted. It couldn't cross that. So now when price tried to hit the same zone at 550, it was a clear indication that price has been overstretched and it is going to face a likely rejection. So it tried once, it tried twice, and both the time price got rejected. So that was a key indicator for me that do not FOMO in. 550 is really expensive, and per technicals, it is likely going to be rejected. Long story short, the price has pulled back into the support zone, which was the price that Microsoft has been holding since a long time. And this is the level that I really like. So this is my first factor explaining why I feel Microsoft has really hit the bottom and why I'm really interested to buy Microsoft at this time. The second concept is known as gap fills. A quick example: whenever a stock is trading at a specific price, let's say the stock is trading at 300, next day, if it opens up at 320 due to some news or something that happened, since price never traded in between from 300 to 320, this is known as a gap in technical analysis. And gaps are mostly meant to be filled. So now if we take a look at Microsoft, when price was trading around 390, it gapped up and directly opened around 420. So this is what created a gap. Now, if I connect the dots and extend this line further, it directly meets the zone that the price has been trading in. So the gap has been filled, and now this is the second factor that tells me that price is likely going to hold or bounce from this zone. Now, I'm going to explain the third one, which is known as RSI, Relative Strength Index. So if you take a look at the chart, when price has been falling down, RSI has been increasing up. So this is known as Relative Strength Index. It means that institutional investors are accumulating the stock silently when the price is going down. Overall, this makes it as a three-factor setup where I feel Microsoft is at a really good price. One thing to note, it doesn't guarantee that Microsoft will always be holding this support. It can really flush through and it can fall further. So I do not always go all in when I find my first level. I always try to see, is there any secondary level on the chart? And per my analysis, if Microsoft was to fall further, there is a significant support zone around 345 to around 360. So I will dollar cost average. But a key thing to note, I did not start dollar cost averaging when prices were expensive. Rather, I'm dollar cost averaging when price is really cheap. If you found this useful, do let me know in the comments. I can do more such analysis on different stocks that you really like. Also, if you enjoy this kind of practical analysis, please do consider subscribing. See you in the next video.